Welcome to this week's TechA video newsletter on Monday, the 27th of October 2008. TechA is where we look at the key indices of the CAC, DAX, Dow, FTSE, Nasdaq and Nikkei using our technical analysis skills and knowledge and many years of market understanding and using these methods by applying them to the current chart and then returning and then seeing, using that analysis, where the chart may go, and then returning a week later, seeing what analysis was correct, and then seeing where the market may go further from there. Those of you that are watching the TechA video newsletter on YouTube or any other free video sites, be aware that we've got a free foundation course which you can take at www.insightsupport, insightsupport.com, and there's a free foundation course which you can take there. So here we have the CAC, and once again with many of these I could go and basically say the same thing for all of them. The European markets basically have been hit very dramatically, CAC being the French market. Huge drops over the last couple of weeks, massive falls. We're likely to see further falls. The basic key point to look out for, which it's going to reach regardless. I know they're going to say it's not going to, but there's a point here, and we're going to see it break this around about 2,500. Around about maybe 2003. There's a very strong support. There's points of other support. There are key supports along the way, basically created by this period of consolidation and peaks and troughs. And it's basically the point where it reached a real low back in 2003, and then sort of late 2002, 2003. If it breaks through, then we're going to see points where we see support around about 2000. The DAX, similar in a way, dramatic falls, although there is a point of consolidation that we had before the market recovered a while ago, back in 2004. We're getting back to 2004 levels. There is a potential there of getting back to earlier levels, down towards the low that was created in 2001. So that's a real potential. So please look out for that. There's a real potential of that. The Dow is actually broken out of a triangle, which I'll put in. There's the triangle, and we've got a clear breakout. I'll just highlight that. There's the triangle. It always follows the prior trend. We've got a breakout on that. If we get a further breakout on that and a break in this support at 8,000, then we're going to see a further drop with the Dow. Look for a similar drop because there's a similar candle with the S&P. The S&P and the Dow tend to mirror each other, so that's likely to happen. The FTSE, we've seen a break at 3,850, likely to see a support just around about here, but there is a real potential of reaching back down to the beginning of the bullish trend that happened in 2003, right back to where we started back then. So I do believe we're going to see a drop around about 3,250, and then maybe even further down towards 3,000 and below. But the next one is around about 3,250, which could happen over the next few weeks. Certainly with the way that the indices are losing ground as they are. The Nasdaq, basically look for a follow in the Dow, break in support at 1191. There is quite a strong support there. We don't have any data that goes back far enough that shows us what happens beyond that, but there is a support at 1191, so expect a break in that. The Nikkei, again, we're going to see further falls with the Nick, and very similar to what we have with the Nasdaq. We don't have enough data that goes back far enough. Even though we have 15 years of data, it's not enough. So we're going to see further falls with the Nikkei, massive drops within the Asian markets. It's rather alarming with what's happening there. So essentially, we're likely to see a slight recovery on Thursday. There's a Fed announcement. an interest rate cut. What they really need to do is drop interest rates to zero. They're not far off that anyway. So if they cut them, if they're going to do anything, they need to cut them to zero. By doing so, that will create a slight bit of confidence in the market. We're going to see a bit of confidence being generated by that within the market anyway if they cut rates. They're going to cut rates anyway, so we're going to see a little bit of a bit of a bounce, a bit of bullishness, and that's going to get an awful lot of people talking of whether there is, have we found the bottom of the market? And the answer is no. What we're going to see is a slight recovery, and then we're going to see another sort of wave of developing countries moving into problems, getting money from the IMF. We've got countries like Brazil and Argentina and Pakistan who are in dire problems. We've got Argentina who are basically taking money from the pension funds. They've literally taken the whole pension fund, the government pension fund, which they don't really have any right to. It's there for the public. They've just taken all that money and said, well, actually, we need this more than you do, and if you want a country still to live in, you best just let us have it. And they've not actually told them, whether there's going to be a pension fund left. Essentially, at the moment, there isn't one, because they're using that money to bolster the economy. We've got so many countries defaulting on their loans from the IMF and so on, and there's other countries that are screaming out to get money from the IMF as well. So it's going to happen. It's going to get worse. We've been talking on Insight this bubble bursting a long time ago. I started talking of it about 4 years ago, and I'm not saying that to sort of out of any form of big-headedness. The markets are cyclical. Once you realise that, once you start to see how oversold things are, how ridiculous things are getting, even on just a local level, with just the property markets being overly exaggerated, and seeing that globally, it's just obvious that a price, something will trigger something that will cause a market crash, and that something just so happened to be the subprime market. And the subprime market has been around for a long time, over 5 years, and it was quite obvious that was the thing that was going to cause a problem. It was just a ticking bomb. We've been talking about this decline, this potential retracement within the stocks for a long time. Personally, I didn't realise quite how dramatic it would be. I knew there would be potential to move into a recession, and then the last couple of years, 18 months, a year, I've been talking real possibility of depression. There really is. We're really in really interesting times. There's certainly opportunity out there to short the markets, where you can make money when the market's going down. You can learn more about that from just basically taking either the full course that we have at Insight, or any of the courses that we have at Insight, even the foundation course, which is free. So that's this week's Tech A video newsletter. Just be aware that on Thursday there's going to be a slight recovery, there's going to be a bit of a bounce, there's going to be an awful lot of talk of finding the bottom. Don't believe a single word of it. That's just going to be there briefly before another country announces that it's in dire straits, and I'm not talking about the band. And we're going to see, we're seeing it within the UK, we're seeing the market drop dramatically. We are now officially in a recession. The US is now officially in a recession. There's even tentative talk that they're moving into a depression. So that's the next step, and that will happen. There is opportunity there. It's just knowing how to take it and knowing how to make money from the markets falling, and that's what we teach at Insight. So I'll be back a week on Friday. I'll be back a week on Friday. I won't be here on Friday with a new update. Don't forget to join our blog. You don't have to actually do anything. You just have to visit it. It's the Insights, the spread betting blog on insightsupport.com. It's on the left-hand side towards the bottom. Okay, that's this week's Tech A video newsletter. Thanks very much.